Welcome back. Accounting 201, the accounting system. This video is going to discuss the worksheet, more on accounting transactions. I'm Judith Paquette, your instructor. The worksheet is a big example for the company Legal Writing for You. This is a service company. It is a startup. Legal Writing for You is a writing and editing service company started by Betty DeLig. Company's clients will be law firms which choose to outsource some of their writing and editing. Betty DeLig is a licensed attorney. She's going to hire a receptionist, but she's going to be doing the majority of the writing and editing herself until she grows her business a little bit more and can hire more people. What I want you to do is look at the worksheet layout. On the left side of the worksheet you have assets, and under each column is a unique asset account. We've discussed the asset accounts in previous videos, but here they are again. Cash is always first, then accounts receivable, then supplies, and last are those long-term assets such as equipment or a building. On the right side of the accounting equation are liabilities. In this one, you've got accounts payable, but you could have a lot more liabilities than that. Then we get into stockholders' equity with common stock and the beginning balance of retained earnings. Then we do that expanded accounting equation plus service revenue minus expense minus dividends. Now let's go back to this transaction. Betty DeLig invests $25,000 cash in exchange for common stock. Now she's invested it in her company, Legal Writing for You. So from the company's point of view, cash increased $25,000. From the company's point of view, they now have common stock, and it increased $25,000. So this is your first transaction for Betty DeLig's company, Legal Writing for You. And you can see that the left side of the equation, where the assets are, is $25,000. And the right side of the equation, where the liabilities and stockholders' equity are, is also $25,000. So we are in balance. Let's go on to the next transaction. We have a total of 8 transactions. So this was your last transaction. I'm putting it up there for your reference. But this new transaction is Legal Writing for You spends $6,000 cash on new computers and printers. So what happened to any of these accounts here? Was cash involved? That's the question I always ask my students. Did cash go up or down? Was it involved in this transaction? The answer is yes. You spent money. You spent $6,000, so cash decreased. So we're going to show this transaction here. Cash decreased. We show negatives as in parentheses to differentiate them because that minus sign is a little bit hard to read. So that's the tradition in accounting, to show it in parentheses. What did we get? We got computers and printers. So the asset equipment account increased $6,000. The asset cash decreased $6,000. So the left side of the equation adds up to 0, so we're in balance for the whole line. All right, Legal Writing purchased $1,300 from the supply company for computer paper and other office supplies. It's expected to last several months. They'll pay for this in 30 days when the bill is due. So when a company gets supplies or inventory, they don't usually pay in cash. They say, send me a bill and I'll pay it in 30 days. And 30 days is typical for payments on account. So what accounts are involved in this? Supplies for sure. Supplies increased $1,300. Cash is not involved because we haven't paid it yet. So we have a liability for this company. Supplies increased and so did our liabilities. Our liabilities went up $1,300. Left side is $1,300 for this line. Right side is $1,300. We are in balance. Next transaction. Well, before we get there, I want to repeat, each individual line has to balance, and then at the end we're going to have the whole spreadsheet have to balance. Next transaction, Betty hires a receptionist to be paid at the end of the month. Is this a transaction? Was there an exchange? No, this is not an accounting transaction. There is no exchange. Well, this is a really important business event. I mean, you've got to have a receptionist for your clients to meet and greet and answer the phone. There is no change in assets, liabilities, or stockholders' equity at this time. At the end of the month, when we pay the receptionist, there will be a transaction. Next transaction. Legal Writing receives $1,200 cash from its customers for editing services it has provided. So again, cash is involved. Did cash increase or decrease? The company received cash, so it increased. So I always try to have students do the cash first because that seems to be the easiest to grasp. Cash increased $1,200, and then over here on the right side of the equation, they provided services to a customer, so we get to record it as service revenue, and it will be reported on our income statement. Next transaction. Legal Writing provides $5,660 of writing and editing service for its customers. The company receives cash of $2,000 from customers and it bills the balance. So again, customers do not usually pay at the point of sale for major transactions such as this. So we bill the customers and we call that a sale on account. So let's record that. $2,000 cash increases. It's on account. A customer owes us money. That's accounts receivable, $3,660, and we recognize the full amount of the revenue, $5,660. And I want to make a point here that even though the customer owes us the $3,660, the company records the wholesale amount, $5,660. Next transactions, actually it's 3. Legal Writing pays the following expenses in cash for September. So we know that cash goes down. Office rent, $2,600, salaries, $1,900, and utilities, $200. So I'm going to have you write those as 3 separate transactions. So cash goes down each time, $2,600, $1,900, and $200, and then over here we show the expenses. And I recommend that students write in the right hand column what that expense is for. So over here I would write rent expense, salary expense, and utility expense. Finally, last transaction, the corporation pays a dividend of $5,300 in cash. Now we only have one owner of this company, and that is Betty DeLig. So she is going to get all the dividend. Now it is not very typical to be paid a dividend at the beginning of a company's first month. However, in this case, she has some pretty big investment that she's put into it, and I guess she's trying to make sure she can pay her own personal bills. So how do we record dividends? Credit to cash, because it was paid. We have that word paid, and we have a negative $5,300 for dividends. So let's talk about these last 2 transactions. Where we paid expenses, we had a negative to cash. We had a negative when we paid dividends. And over on the right side of the equation, under expenses, we also show those as negative, and under dividends, we also show those as negative. The question is why? Revenue increases stockholders' equity. It increases our value. It increases retained earnings. Expenses and dividends are subtracted from retained earnings. So that is why we do that. Our next step is to total each column. So the total in the cash column is $12,200, and so forth all the way across. Please note that if you add all the asset accounts up, that balance is $23,160. If you add all the accounts on the right side of the equation, that is also $23,160. So assets equals liabilities plus stockholders' equity in total, and each individual row on the worksheet, assets equals stockholders' equity, liabilities plus stockholders' equity. I want to show you the financial statement. So we just pick up those ending balances and we create the financial statement. So look at the income statement. She had $6,860 in sales, $4,700 in expenses, and $2,160 in net income. However, in her retained earnings statement, she had a zero beginning balance. Remember, this was her first month in business. She recorded the current net income, but because she withdrew $5,300 in dividends, she ended up with a negative ending balance in retained earnings. This often happens for startup companies. Over here on the balance sheet, we've got $23,160 in assets, and under liabilities and stockholders' equity, we have the same number. And again, retained earnings is recorded here as a negative. This concludes our video on the worksheet.